Turning now to Japan, the yen has gotten a boost from the opposition party's landslide victory. Question is, will the gains continue? And to help us answer that question, we are joined on the phone by Ashraf Laidi. He's chief market strategist at CMC Markets in London. Laidi's currency forecasts frequently place #1 in FX Week's currency forecasting. Thank you so much for joining us, especially on this UK bank holiday, Ashraf. We saw the yen strengthen in response to the election result. Tell us, first of all, in what way the DPJ victory is yen positive versus the former ruling party?
Specifically for the elections, ushering the sea change, a political sea change here, really does away with really continuously favoring those spending packages for infrastructure packages that were mainly seen as friendly for big business. And the DPJ is really seen as a big bonus into the consumer's pockets, whether really cutting some poll taxes or really favoring the household spending, something that has been really badly needed in this deflationary spiral in this country. So this was seen as a quite positive for the yen. There were other talk, too, that some economic officials that work at the DPJ that basically were shunning any potential intervention in basically lowering the yen. So this was really seen also as positive for the yen. But the big jump was really the best of both worlds in the sense that because we had the bout of risk aversion that triggered from China, that also really helped speed up the gains in the Japanese currency.
Okay, now is this a temporary boost then for the yen? What about going forward?
Well, yes, going forward, we still see the yen as a sort of a favorite currency to buy against currencies that still have not seen their lows, such as the British pound and such as the U.S. dollar. We're still looking at a dollar-yen to eventually to break below 90 and to really retest those 87 lows that we saw back in December. I do think that we could be going as low as really 81 and 82 and dollar-yen. Sterling yen would be another currency pair that could go towards 147, 148. The commodity currency, such as the Australian dollar, even though this currency is doing so well against the U.S. dollar, against the Canadian, against the sterling, I do think that once we go back in a more concerted action in trading, I think we're going to see more of a retreat in pairs such as the New Zealand dollar and in the Aussie versus the yen. Do we expect anything below, let's say, 80 in dollar-yen? I would say there's probably as much as little as a 20% chance right now for dollar-yen to fall below 80.
Okay, and just very quickly, Ashraf, we've got a big week in terms of economic data. What will move the FX market the most?
I was calling this may be the mother of all the volatilities. We've got a holiday shortened week. We've got the payrolls in the U.S. We've got the Chicago PMI. We've got the ISM. And either we're going to have something very, very quiet or we may have this volatility surging. I would still be favoring strength in the Japanese yen at the expense of not really the dollar right now, but really the British pound. I believe the British pound has still room to go lower versus the dollar towards 150, 50, and even against the yen, like I said earlier, towards the low 150s and then eventually towards 145.
Okay, so more pressure on pound yen. Thanks so much. Ashraf Laidi, chief market strategist at CMC Markets in London.